Attention and intention. How to use these interest rate cuts to your financial advantage, both today and well into the long run. This is Sugar Mama's Fireplay. Hello and welcome back to another episode of Sugar Mama's Fireplay. I just want to take a quick moment to say how grateful I am that you are here. How happy it makes me knowing that you're listening to this episode every single Monday morning and that I get the opportunity and the honor to be able to guide you, to give you great financial information and education, but also to empower you to work on your financial well-being, to build passive income, to reduce the debt, to build up those emergency savings, and to feel so much relief and financial harmony in your life as you look at all those exciting financial goals that you might be working on now, but also the new ones that you are ready to launch and start working on in your financial future. So thank you so much for being here and allowing me to be a part of your Monday morning routine. Now, today I want to talk to you about the interest rate cuts, what they mean for you, and how to make the most of them, not just today, but well into the future, because I don't want to just be a quick fix when it comes to financial stresses in your life. I want to be able to give you solutions, ideas, inspiration, and strategies so you can go from strength to strength. It's not just about paying off debt, but it's perhaps about investing, or it's about preparing to have a wonderful retirement, or all the other various investment strategies that we talk about, like debt recycling. It's a journey. It's not about quick fixes and short stories. It's about really allowing the financial well-being to infiltrate in your life in so many different areas and obviously reap all the wonderful benefits that come from this. Now, as you know, we recently had a very much welcomed interest rate cut of 25 basis points. And thank goodness, most of the banks have passed this on. And of course, there is talk that there may be another interest rate cut just around the corner. In fact, in just a matter of days, that is the 20th of May. Now, as we look at these particular cuts, I just want to sort of point something out to you. If you didn't know this about me, I'm actually really protective of you. I want to make sure that you are getting the best general advice, that you understand all the different options that are available, and it's easy to work out what is good for you or what is right for you and your loved ones. So I want to talk about what happens and what to do with the cut that we just had, but also what to do if we get more cuts. So this is the big thing for me. And I really want to make sure that you understand this so you can have the attention, the awareness, and of course you make some great decisions and choices with intention and precision. Because I don't want this interest rate cut just to be, a sense of financial relief. I want to flick the switch and actually go deeper and wider with this. I want us to see this interest rate cut and future interest rate cuts as an opportunity to really get ahead financially, proactively reduce the financial stress in our lives today, but also for well into the future, to realize how many options out there now exist to improve our financial well-being, and of course, to make a serious dent on our debt. So we're going to talk exactly about this right now, today. And I want you to look back in, say, 5 years' time, going, gosh, I'm so glad I listened to that particular episode on Sugar Mama's Fireplay, because the things I learnt from that episode, I went and applied, and I'm so glad I did. So let's get started. All right, first of all, what to do when interest rates drop? Now, the first thing is to find out whether your lender actually passed on the full rate cut. Often people, will see on the headlines interest rates have been cut, and they assume that their banks will apply that cut in full to their mortgage, but it's not necessarily the case. There's often a delay as the banks, make a decision and obviously make that announcement, and then the rate is actually, applied. But then they may not necessarily apply it in full. They might maybe apply half of the interest rate cut. So you want to know exactly what your bank have done. How have they passed that on to you? Have they kept that interest rate cut for themselves? Now, once you've found out what they've done, I want you to go and check the rate that they're offering new customers. Now, this is an important thing to do because if they're offering a lower interest rate to new customers than what you are paying, that is a sign there is a bit of a wiggle room for you to contact the bank and ask that they beat that rate or as an absolute minimum, match that rate. So whilst we've recently had a cut, there potentially might be a second cut just by making this phone call to your bank. Now, if your bank says, sorry, no, we can't match the same rate as what we're offering new customers, you need to ask them why, because that is simply not good enough. And once they've given you that answer, you can politely and obviously respectfully let them know that you'll be shopping around for a better deal, and that is your sign to go and reach out to a mortgage broker and let them do all the heavy lifting and shopping around for you to get you a better interest rate. Loyalty tax is expensive. Don't get complacent because there are serious savings to be had in this. Now, you want to make sure, whilst you're doing all of this work, is that the interest rate obviously has been applied. But more importantly, how has this interest rate been applied? Now, some banks will pass on that reduced rate, but keep your repayments exactly as they were prior to the cut. Now, this is really important because it actually helps you get ahead faster without having to lift a finger, whilst others might actually automatically lower your monthly or fortnightly repayments in alignment to that cut. Regardless, it is absolutely crucial to know what is happening to your repayments because obviously that impacts your cash flow. Now, depending on when you signed your mortgage papers, quite often there was a little box that you may have ticked, and it would have been a question as to how you want interest rate cuts applied to your home loans, and you would have selected one or the other. Now, that is where they would have applied that particular rule, but for most people, they can't actually remember which box they ticked, and most people will actually automatically select the option to lower their monthly mortgage repayments. But you must find out exactly how the bank have passed on that cut, because that will then indicate how they're going to be applying future cuts as well. Now, this is the challenge they have for you, and I say this with a complete respect, compassion and understanding of the rising cost of living and how tight everyone, including my own family, are doing right now with just trying to keep your head above water. Now, let's just all take a big step back as well. We've had 13 interest rate rises. So the fact we are still hanging in there is admirable. And we should really feel proud of ourselves and just give ourselves a much needed pat on the back. But here's also the other thing. It shows us how strong we are. We're so much stronger than what we realize. So if you've been coping with higher repayments, try your very best to keep them at the same amount if you can, even though the bank may have reduced your minimum repayments automatically. And of course, if you can only meet halfway, that's okay. That's still amazing. Just as much as you can, try and reduce sitting on the minimum repayments when it comes to your mortgage. Now, to help give you some information that will obviously fuel your motivation, I want to give you some examples to see really what savings can be had by paying more than the minimum. Say you've got an $800,000 mortgage and say you're on a 30-year term that you just recently took out. If your interest rate drops from, say, 6.25% per annum to 6%, assuming that the full 25 basis points was passed on by your bank in its entirety, your payments, assuming again that they have automatically reduced in alignment to that interest rate cut, they'll be going from $4,930 down to $4,800. So technically you're saving about $130 per month. But here's the thing. If you can find a happy medium balance where you decide to, meet halfway and keep your repayments at, say, $4,865, and obviously that meaning that the other half of that interest rate cut gets put back into your budget to create some relief and allow you to get back on top of things, you could potentially save $39,900 in interest over the life of that loan and pay off your home loan just over 1 year sooner. Now, that's just assuming that we have no more interest rate rises and, of course, no more interest rate cuts. That's almost $40,000 with after-tax money that gets to stay in your pocket by doing this. And that is just by meeting halfway. That's an extra $65 per month on the home loan. So please know that this isn't actually about punishing yourself or depriving yourself. It's actually about attention being aware of interest rate cuts and how they're being applied or not to your repayments, and then taking an intentional decision and action as to how you're going to use these to your financial advantage. So it's very much about discipline here and avoiding that sneaky thing that we all know is called the lifestyle creep. These small changes matter way more than you realize. So I really want you to use this to your financial advantage and use this as an opportunity to sit down, review your budget, and see what you can safely afford and how you can actually increase your mortgage repayments above those minimum repayments. And ideally make sure that you try and have this applied in an automatic repayment. And that might be just going into your internet banking and adjusting the minimum repayment to bring it up to what it previously was before, or perhaps setting up an additional automatic extra repayment so it has the same impact on your cash flow. As I said, this is just a simple example of just an extra $65 per month. Break that down over a week. It's not even $20. So this is money that is really being used wisely. Now, to help you stay really motivated, I'm going to share with you one of my absolute favorite tools that I personally built myself. And yes, it is free. So when you're reviewing your budget and you actually can sort of see what's possible, I recommend jumping onto the Sugar Mama website, go to the calculators section and go to extra repayments calculator. I'll go and link it in the podcast notes for you. Now, what this tool does is it helps you visualize the impact of very small extra repayments. Now, unlike standard extra payment, this one actually allows you to combine the impact of an additional lump sum repayment on top of those extra repayments. So for example, say you get a tax refund or a bonus, you can actually add this in on top of increasing your extra repayments. So you can see exactly how much time and money you can save by actually applying this advice to your budget, to your cash flow, to your financial goals, and of course, your mortgage. And when you see the impact and see how much money you can potentially save, it is beyond motivating. You get so excited, and in fact, it actually inspires you to go back to your budget and see what other money you can come up with to, take out of your budget to put towards enjoying a mortgage-free life, which we know would be fabulous. So when those numbers are in front of you, it's really hard to actually ignore the power these facts and figures actually have over you and improving your financial well-being. And as I said, I've shared this in other podcasts before, the average Australian gets back about $2,500 a year. So if we go back to that example of, the mortgage, the $800,000 mortgage, and applied a $2,500 lump sum repayment on top of the, extra $65 per month repayments, that actually will save you not just $39,000 a year, but actually close to $51,000 a year. And you'll have your home loan paid off 15 months sooner. Now, again, keeping in mind, that's just one tax refund in 1 year. Imagine if you did that every single year. It's going to have an incredible impact and really shaving off tens of thousands of dollars off your home loan on top of what we've already shown and potentially save you years off your home loan. Imagine having your home loan paid off in, say, 10, 15, 20 years. That would be unbelievable and something I highly doubt you'd ever regret. Now, you can really see now, these numbers really do matter. And if I look at the average Australian mortgage, which is around about $642,000, at an interest rate of 6.25%, those repayments are just under $4,000 per month. Now, assuming that rate of 25% basis points gets applied to the loan and that person was to keep the mortgage repayments the same, they would actually save comfortably $53,000 in interest over the home loan or for the life of the loan and actually have that mortgage paid off 20 months sooner. Again, this is just the impact of a simple $100 per month. Now, again, $100 is a lot, and I don't mean to turn my nose up at that at all. But if you think about that, again, per day or per week, it's a couple of coffees during the week, or it's saying no to Uber Eats, say 2 times per month, or no to buying, say, a new pair of jeans, for the season. These are the choices that you have within you. So if you can have that awareness and then intentionally apply them, you're going to be making some really wise decisions, and it becomes a really powerful wealth building tool to have in your toolkit. Now, another great tool that I recommend, or I guess tactic, is to understand your why. Tapping into your why is going to be a powerful endless source of motivation. If you are like me and you're dreaming of a life with a lot less financial stress, a lot more breathing room, greater freedom, more holidays, maybe switching to part-time work or an early retirement, then one of the smartest financial moves that you can make for yourself is to have a go at beating the bank and paying off your mortgage faster than the 30-year prescription that they have given you. Yes, the banks put us on a 30-year term. It's how we get our loans, approved in the first place. It's what we often need to have that serviceability box ticked in our loan application. But just because they put you on a 30-year term does not mean that you need to follow it. You really are perfectly capable of paying that off so much sooner. But again, it's about having that attention, being aware of it, and applying it with intention. So every dollar above your minimum mortgage repayment significantly reduces your interest, your risk, and your anxiety. And it buys you way more control, so much more peace of mind, and obviously a greater sense of future flexibility. And for the record, you want to try and do this as soon as later. Please don't get into the headspace where you start procrastinating and making excuses and think, you know what, let me just enjoy 3 months of having a smaller mortgage repayment and then I'll go back and apply it, because I can pretty much guarantee it that there'll be another excuse in 3 months' time. And maybe there'll be more cuts applied in the meantime, and that lifestyle creep has kicked in, and then you're scratching your head going, hang on, why am I struggling so much? We've had 4 interest rate cuts and I'm still struggling to make ends meet and I'm still living paycheck to paycheck. Don't become a victim to the lifestyle creep. Get in there quick. Automate everything as much as possible and aim for as much as you can safely afford within the boundaries of your budget to see what extra repayments you can apply. And of course, even better, make sure you contact the bank and let them know that any further interest rate cuts are applied, where they automatically maintain your mortgage repayments regardless of how much interest rates come down. And you will start to feel so much better, as every time you log into your internet banking, you'll see that your mortgage is finally going in the direction that you would like, down, so much sooner. And again, it becomes your source of motivation, especially when you've tapped into your why and what that means. So what I recommend you do as a quick fun exercise is to write down 3 to 5 points as to why you would like a mortgage-free life. As I mentioned before, things like more holidays, being able to cut down to part-time work, being able to maybe start to investing or looking at like a debt recycling strategy that you can now afford to because you have that cash flow. Or perhaps it means you can start putting more money into superannuation, or perhaps it means you can start helping more people around you, whether it be helping your kids out financially, helping them, save up their own deposits so they can have their own place, or even just having that freedom and cash flow to spend and invest in you, whether it be doing further education, improving your health and well-being, or even just giving to charity. And when you've written down your 3 to 5 benefits of having a mortgage-free life, make sure you put it somewhere where you can see it every day, whether it be by your toothbrush for every time you brush your teeth twice a day, or one of my personal favorites is in the shower, or perhaps in the car right near the ignition button. Now, as we work towards wrapping up today's episode, I also want to remind you to be cautious and also to be wise. I want us to all be very realistic about this current interest rate cut and, of course, future interest rate cuts. But we need to remind ourselves, nothing is guaranteed. If inflation picks up again, rates could very easily change directions again and go back up again. So if we haven't used this window wisely, that is this opportunities wisely to get on top of our mortgage repayments and reduce our debt, we may be actually feeling the pinch all over again. We could be looking at more interest rate rises just around the corner, and we'll be regretting that we didn't use this window wisely previously. So as I said, let's use this moment to get ahead whilst we can. Let's use this as an opportunity to reduce our debt as much as we can right now, and to make sure we obviously are far more protected for any future economic shocks and interest rate rises. Now, whilst we can't control what the RBA does, or where inflation, of course, is headed, we can control our response, both emotionally and financially. And of course, we can be really grateful for this opportunity and step up as quickly as possible. We can say no to that lifestyle creep that so many of us very easily get caught up in, and we can stay consistent, focused, and actually choose to act with intention with our mortgage repayments. So if you ever asked, oh my goodness, how am I ever going to get ahead? Oh my goodness, how am I ever going to reduce this financial stress in my life? It feels like it never goes away. Or how can I actually start creating financial freedom in my life? Can I remind you, this is one of those rare windows. Doing something really small, like keeping your mortgage repayments steady, can have a profound impact with the reverse compounding interest on your home loan. And so this is something that could be life-changing for you. And of course, something that your future self will thank you for. All right, well, that is it for today's episode. Again, thank you so much for tuning in this morning. It is always an honor to connect with you, and I'm so grateful that you are here. If you enjoyed this episode, it resonated with you, can you please share it with someone that you care about, someone that has a mortgage? And for anyone that wants to actually have a mortgage broker or is looking at negotiating a better deal with their existing lender, please feel free to reach out to me and I can give you the details of my own mortgage broker. As you know, this is Adam McCabe from Blue Lantern. He's a brilliant mortgage broker. I have absolutely no incentive to actually pass on his contact details other than knowing that he will do a great job for you. Now, in the meantime, please don't forget to follow this show so that you never miss an episode. And in the meantime, please keep that financial fire burning bright. I'll see you next Monday morning. Ciao for now.